So, what do you do when you're a uranium investor just like me and you want to buy stock? You have to decide which management teams to go for. What else should you be looking for in each stock, in each company? And most importantly, how do you mitigate risk and when do you finally sell? If you're wondering about all of these things just like me, then what you could do is just go straight to the experts. Look at the people that have already been through the cycle. One of these people is none other than Marin Katusa of Katusa Research. I'm sure you've heard of him, and he is probably one of the only guys who has been to most of the uranium sites that you can possibly imagine. All these companies that come to your head, especially in North America, he's visited, actual boots on the ground. He's seen them all. He knows the management teams, and he backs some of the very best companies in North America. I'm a lifetime subscriber to his services, to his research, and the only one regret that I have about being a subscriber is that I should have bought more of some of the stock recommendations that he's given in the past. So here's the interview. Let's learn a little bit more about what to do with our uranium positions. Okay, I am here with Marin Katusa. Now, most of us have heard, Marin, about Paladin, right? In the uranium space, there was Paladin that got financed for like 1 cent and then ran to almost $10. And we always know this story, but for the people like me who weren't in the last cycle, we don't really know many of the names that were active in that space. Can you mention some of the other gains by other companies that aren't Paladin during the last bull market? Because you were around that time, weren't you?
Yeah, and just to remind everyone on Paladin, it wasn't like it went from 1 cent to $10 in a linear fashion. The first financing was at 50 cents, then there was a 25-cent round, then there was a 10-cent round, and then a penny-cent round. So, there were many, many people during that journey who got shaken out, and it was 3.5 years of, up and down, up and down, 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 and then when it really did take off. And then there was many subsequent financings from that point moving forward. There I'll give you some great examples of, I think you have to give credit to Dev and his team back at the Strathmore days. They were there when very few others were. I remember being on site in, I think it was early '07, late '06, early '07, somewhere around there, when I came up with the idea with Dev to spin out Fission, and I financed him as the lead order, and that's how Fission was generated. It happened in Wyoming, and what a run that's been. It's been they're on 3.0, and there's been two buyouts during that time, so that was a great run. Another one for my subscribers was late '08 when we bought a big position in Uranium Energy Corp. It was under 25 cents US per share. And within 2 years, it ran to over $7 a share. So, there's many examples of those. And you see some of the hardcore guys or the biggest gains in the last sector, those individuals are still in the sector. Some of them are, significantly older. So you have to put that into your investment perspective and risks. But, there was other ones run by geologists. There was a, good friend of mine, a very well-known geologist, Rick Kazmersky. He had JNR. That went from 5 cents to $4.50 during that time frame. And again, it wasn't a linear reaction. He was racked up in debt and running the company out of his garage. Another one was Ted Truman, very close friend of mine, a stock that I was probably one of the largest shareholders of. And Ted couldn't raise $100,000 privately. He just couldn't do it.
Wow.
He didn't understand the brokers. He had no concept of the public markets. It was actually his niece's husband, Paul Geyer, who I knew from the Vancouver Angels Network, which is a kind of where we're angel financiers for ideas and entrepreneur kind of financiers. And him and I kind of financed this thing. So you look at those types of stories, or when Rough Rider, which eventually became Hathor, that was a 10-cent and a 25-cent private financing before it became Hathor, and then the buyout at $5. So there were many stories, but what are the same lessons? Good people and good jurisdictions. Now, yes, The pounds in the ground story works when there's the big run up, but you know, I've reached a point and traveled around the world enough that I'm trying to get everyone to avoid the AK-47 nations because I think you'll do just as well in the Athabasca and the best parts of the U.S.
Awesome. Apart from the very best people, are there any other sort of common denominators that you see? Is there, any sort of maybe access to a mill, any sort of political issue that might help or hinder companies?
During this phase, like the first leg of the bull market, I think people will back, defined resources. So, what do you have? A lot of people haven't yet. There's a couple of stocks that have over $100 million market cap where the country has never produced uranium before and actually have no uranium legislation. So, that makes me kind of question. And these are assets that I visited in '06 and '08 and 2011, and not much has changed from the government standpoint. So be careful of that. There's been many cycles in uranium, and when it was first funded in the '60s and '70s by the energy companies, be very careful where you're investing. So right now, the common denominators are where are they, the location, jurisdictional risk, B, who runs them, and that is a key factor. And even yourself, now that you've been in the industry long enough, I think you're figuring out who's who in the zoo. I've been in the uranium for almost 20 years. You really get a good feel of who's who in the zoo, but also, their weaknesses and their strengths, and then who's backing them also is another factor. So if you're looking at a president and his vehicle, everybody will have a tough time if uranium pulls back $3 or $4, they'll all get hit. But who's backing them? Who can finance them? Are they going to have to go to the street and get completely diluted, or are there some key shareholders? And who are those key shareholders? And what is their interest and agenda? So that's another factor in it all moving forward, also. And obviously, like you said, infrastructure in place. So where I'm focused, as you know, as a subscriber, you can get built out assets, permitted, and very advanced assets at a big discount to what would even cost to define these resources through drilling. So why bother with the risk when you can just sit back and pick up the most advanced assets on 25 cents on the dollar right now?
Well, I'm a lifetime subscriber, and one of the reasons why I even subscribed to your service, Marin, was that I had a very strong feeling that you really understood the energy sector as a whole and not just mining in and of itself. And I was just completely shocked at how precisely you predicted this latest run up in oil, but then you said that it wouldn't hold up. And then just as you predicted, the bottom started to fall, and like all of a sudden oil is down again. And I just watched that and I thought, well, this just confirms the fact that following the right people and the people who understand the market in a much deeper level than I ever could, because I am not going to spend nearly as much time as you and your people do trying to research oil, for example. And knowing what you know about the energy markets, what makes you think that this is the beginning of a real uranium bull market? Because we've had a few false starts before.
So let's start off the two wild cards that very few people pay attention to. That even in my book, I spent a lot of time talking about what the Russians and the Kazakhs agenda is. So let's kind of circle that as the former Soviet Union, and then also the Japanese. So I have a very unique insight with the Japanese because through one of my other ventures, I sit on the board with Mitsubishi, which is one of Japan's largest metal companies. It's a multi-billion-dollar conglomerate, hundreds of billions of dollars of assets, and you get a real sense from the higher ups of where is uranium. And I was the first to publish, hey, hold on, the Japanese restarts are going to take a long time and they're going to be much slower. And I debated guys, and uranium's an interesting sector because it's kind of like the gold bugs on steroids. I compare them to the silver bugs, the uranium bugs, and because of my relationships with the Japanese and traveling to Japan and getting a good sense, it was a slow process. It was a very political and social process. So those always take more and more time. So now that they restarted 5 reactors, again the process will be slow and it'll be continuous. But that actual paradigm has shifted to the positive, mainly because of the LNG costs are so expensive and crippling to the Japanese. So that's there. Now, what about the Russian perspective? So again, I was in 2013. I published one of the biggest issues with uranium were going to be, and it was the underfeeding market. And I actually got into a debate with the president of Cameco publicly at the big BMO conference, which is an invite-only conference for fund managers. And everyone said no, the Russians can only do 5 million of underfeeding. And I said, well, my calculations show they could do probably 20 to 25. And I was actually mocked publicly by these analysts. And I said, do you guys not understand the mathematics of this? They can go from 0.3 to 0.2, plus they're depreciating currency. So, it was kind of like when I was on the big US CNN, when the host debated me about how the Russian production would be crippled because their currency was devaluing. I said, no, the opposite is true. As the producer's currency depreciates, their domestic production, now when they're selling in US dollars, whether the price of uranium goes from 40 to 30, but their currency's depreciated greater, they're still making more money than they were before. And that was something that was being misunderstood also with the underfeeding situation. So that now is starting to also take a turn. So the Russians now, that paradigm has shifted because of the extra supply of the SWUs, the single work units. It's not as cheap as it was just a couple of years ago. So those two paradigm shifts on top of Cameco coming in and saying, our U.S. production's not economic here. So if Cameco's production in the U.S. isn't economic, and they got to shut down MacArthur, which is one of the best deposits in the market, that was a huge signal, and they're going to go into the market and start buying up supply. Then you had Yellowcake, which you and I are indirectly very large shareholders of through one of our recommendations in the KRO. You start seeing all of these SPVs now popping up trying to do similar types of things. So you start seeing the paradigm has shifted from oversold to now almost getting into a buyer's market. So it's kind of shifting. We're still not there. There is still secondary supplies available, but it's moving to the right trend. And the reality is, even though uranium is one of the best performers of 2018, there's still no one making any real significant profits at current production. That's where it comes down to. The utilities are not signing up major long-term agreements yet. So everyone's kind of on a wait and see until that paradigm shift of, breaking 30 and moving on. That's when the utilities might start waking up.
So we're sitting at about $29 per pound of uranium right now. There are a lot of speculators already in it. Well, when I say a lot, I mean, like uranium bugs, like yourself, like me, like a few of the people that actually follow this channel. But when can we decide when to sell? Should we look at the price of uranium itself? Should we look at mergers and acquisitions? Should we look at something else? What are the indicators here?
So as I've been publishing in the KRO, or even, I manage all of Doug Casey's money in this sector, and he always jokes that, when Marin says buy, when Marin says sell, buy more. And he thinks I'm a little bit of an early seller, but that's okay because I like to be early to trends, and I think we're early to the uranium market. It may take a couple of years, but that's okay. Everyone has to decide their own risk perspective. So let's just say you're a retail buyer and you're a teacher or doctor or realtor or construction worker, whatever. You got to be able to sleep at night with your portfolio. So the first rule is never ever be overbought in any one stock. That's why I believe in the tranche concept the matrix I talk about in our newsletter of tranche 1, 2, 3, 4. And I just use my own examples that I've learned the hard way throughout my career. So figure out what percentage you're okay holding on to, with the fact that if you believe it'll take 2 years, budget 4 to 5 years, because it always takes longer than, the market can seem irrational longer than you can stay solvent. So remember that fact. Number two, there's nothing wrong with taking the Katusa free ride whenever you feel comfortable. We did it with Northern Dynasty, and or let's take the Nevsun example. Yeah, did I sell too early? Probably, but we made a killing, so who cares, right? And it's all about risk mitigation. If you look at the most successful players in the resource game, it's all about risk mitigation. So that's fine if you leave up some of the upside as long as you protect yourself on the downside. And I give numerous examples of times that I've left up big upsides. But you know what? I still have created one of the largest funds in the sector, and I'll never be the best seller. But as long as you protect and mitigate your risk. So, if you're sitting on a double, sell half and let the rest ride for free. You'll sleep at night. And if it goes to zero, you got nothing to lose, right? Because anything can happen in this market. Of course, it'd be great to hold a whole position on a 10 bagger, but that rarely, rarely ever happens. I'll give you a great story when you mentioned Paladin. When I started taking over Doug's stuff, I realized that he had warrants in Paladin. And the only reason he didn't sell them before is because he forgot about them. And he ended up making $500,000. He misplaced his warrants. That's happened. So, the absolute best way to play the resource sector is through private placements. And I talk a lot about that in our newsletter. And I absolutely love warrants. And I think I've done the majority of the listed 5-year warrants on the exchange. It's my own model. And, so I think that get to the point where you can start participating in private placements, because that truly is the greatest risk mitigation, where if your warrants are listed in free trading, you can actually sell your warrants and ride the shares rather than the traditional model of sell your shares and ride the warrants. So these are the different aspects, but at the end of the day, everyone has to define their own risk tolerance. But remember, to be a true successful speculator or even investor, risk mitigation is the key.
Awesome. I love warrants myself, but I think we're just starting to see better deals now, because we went through the whole 2016 excitement of mining companies actually tripling for no reason, and then things got back down to earth, and then you started to see more 5-year warrants, which really excited me. And that's about the time when I was able to start engaging in those types of investments. So I highly back what you're saying, Marin. Absolutely recommend it to anybody, especially in the sector.
One thing I'd add to that is a lot of the industry pushes back to my concept, right? I'm not exactly the most liked guy in our industry, and I really don't care because I work for my subscribers and it's about making my subscribers money. But I remind the bankers in the industry and even the executives in the industry, and they hate it when I talk about this, but why is a president of a company who gets a salary, gets benefits, medical, and his family, and that's fine, you deserve that, but they also get the options for being there. And those options are 5-year options. So when all these, geologists who are excited about getting me to put up millions of dollars of my own money and bring my subscribers risk money into this game, but they won't write a significant check. So that's right off the bat doesn't work for me, because I'll only back management teams that have serious skin in the game at the same price and the same terms as my alligators or my KRO subscribers and myself. But if they bitch about a 5-year warrant, I remind them that it's interesting how they don't bitch about their own 5-year options, that they didn't have to put up there's no financing for that. They just get a 10%, whether they have the 10% rolling rule with the TSX or 15% rolling rule. And I remind them about that. And, if they don't like my 5-year full listed warrant and they offer me a 2-year half warrant, I always say, no problem, I'll do that if you take 25% of the financing and you switch your options to be half 2-year options. And it's funny how so many management teams don't view me or my subscribers or the investor in the same light as their own options. Those are the management teams I won't back, and they won't be in my newsletter. The management teams I will back who are the ones like Ross Beatty, who's the largest investor in his own deal and is on the same term, same price as our subscribers. That's where we are in this game, Fabiana. And you don't need to play a promote. A promote is when you're paying a much higher price than the management team. That's, what you see in the middle, or in the legs of a bull market. We're not there. And if you position yourself correctly, you can actually get in on deals cheaper at a lower price than the management, who are the largest shareholders of the deal.
I really couldn't agree with you more, 100%. And still within this topic of financing. Now, anybody who's been around the block for, any length of time at all will notice that royalty companies in the mining industry are really a standout. Their balance sheet looks better, their cash flow looks better, their share price looks better. It just made me wonder, what is the relationship between royalty companies and uranium? Why hasn't there been, royalties for uranium until now, and what's happening in the space?
Okay, so that is a great, great question. I'm glad you asked that. Couple of things. So when the whole royalty model kind of became famous, whether it was Pierre Lassonde or Silver Reading, which was a spin out of the Gold Corp team, when you look at how it all came out, they were gold guys. The first royalties came out of gold, and why did it come up? Because gold traded at a premium on a NAV basis, the precious metals. So in 2012, the kind of key guy for Silver Wheaton, which is now Wheaton Precious Metals, was actually Nolan Watson. A lot of people don't know that, but he was the first employee of Silver Wheaton. And he, when it comes to the top 5 royalty guys in the world, you got to put him there. And he's a very close friend of mine. And where the whole concept with uranium royalties came about was in 2012. I presented him an idea, and here's the reality. They just didn't have any understanding of the uranium. Like, it's a very different, it's an energy, and is it ISR, or is it, deep Athabasca? Are you going to Russia, or is it in Africa? Like, there was very few experts that truly understood the uranium game, that understood the royalty concept. So it was just one of those things that very few people understood it or had it. So during that time, I was working with Nolan. I brought the idea to Nolan about buying out the Tech Resources royalty. So I introduced him to Don Lindsay. And interestingly enough, I don't know if I'm allowed to say this or not, but what the hell? It is what it is. They offered a deal at a much higher price. They got rejected in 2012. He ended up getting that same package in early 2016 at a much, much lower price. So that's a fact. And good on Nolan for doing that. But during that time, I kept explaining to him, I go, man, like, look at the data. Nobody is doing uranium royalties. And it just came down to that we don't have the bandwidth. And then as I talked to other royalty companies, we don't have the bandwidth. So if you look at the basics in the uranium market, another reason the uranium companies didn't go that route is because I kind of compare it to, like I said, the silver bugs. It's a very niche market. Even though people get excited about uranium, we're talking about a fraction of the gold market when it comes to market cap value. The biggest company in uranium publicly listed and traded up until Kazakhstan was Cameco, and you could buy 100% of it for about $5 billion, which is nothing for the major producer of the sector. So they traded historically at NAV or a premium to NAV, these uranium companies. So they didn't have that big ARB opportunity, or they weren't trading at a discount to their NAV. Well, let's fast forward to Fukushima. Then you had the Japanese reactors shut down, the Germans shut down, and now so many of these uranium companies are trading at a significant discount to their NAV. Now, that's where the opportunity arose. So I approached what I think is probably the best positioned management team from both an experience, but also what I call legs. The management team has to have the energy, the experience, and the ability to be able to understand the financial modeling of what it takes to do streams and royalties in the uranium sector. So there's very few groups that are available and capable of doing it when it comes to uranium. On top of that, when you look at the data, over 50% of all the producing mines in gold have some form of royalty or stream on it, and less than 8% of the uranium projects have a stream on it. So it's not a crowded place. There's really one group doing it. And on top of that, there's not, even if there's Johnny come latelys to it, they don't really know what they're doing. So they're going to make a lot of mistakes. So it's a great place to be at. See, let's look at the success of Franco, Nevada, and Silver Wheaton or Wheaton Precious. The key factor of all this was being early, so there's no competition, and the commodity price moved up significantly. A lot of the royalty companies came later when gold was north of $800-900 an ounce. Well, you don't have much room moving forward when gold's now trading at 12, and I do think in the near term there's more pressure on the downside. But with uranium, you're at an absolute, you're near the bottom of the market, and everyone's recognized that. And whether you're the Kazakhs, the Russians, even the Japanese now are looking at the market. The DOE in the US is no longer dumping their supplies into the market. So many things have changed. So I think that sector is probably the most exciting for me on a risk-adjusted basis.
Well, I am biased towards it myself. I'm also holding shares in a special royalty company that has interest in uranium, but I'll just leave it at that, and we'll give more information when the time comes. Marin, thank you so much. Take care.
Thanks so much.
Now, maybe you've heard of this, but Marin Katusa and his team came up with a uranium-based webinar where they actually interview other experts and they talk about uranium from a few different angles. If you haven't watched it, then click the link below. And if you do decide to join his research service, like I have been a part of for a few years, then I may actually get a commission for that. So disclaimer, I'll always let you know if I'm getting paid to do anything. I'm not getting paid to make this video. It's a pleasure to interview somebody at the level of Marin Katusa. I was actually flabbergasted at how much time he gave me, but you must know that I'm a happy lifetime subscriber, have been for several years, and the webinar is not to be missed if you're invested in uranium or if you just like to know what this is about. What is investing in uranium? It's becoming more and more of a hot topic right now, and I believe you can learn something from it for sure. So click the link below and take notes. I'll see you on the next video. Take care.